Hey everyone, welcome back to the channel, your number one source for income-oriented investing. It's time for the first 2025 income landscape overview episode, which is going to cover the Canadian market. So to my American friends, the US episode is coming up very, very soon. So in case you're new here, my name is Adrian, and on this channel, we take a look at everything that is the high yield landscape, high yield ETFs, with a focus on covered calls, covered call ETFs. So as usual in this monthly episode, let's look back and see what the market has done in the last month. If we look at the S&P 500, and by the way, for reference, I'm filming this on January the 10th, which is a pretty bad day. It's a pretty brutal day here. Everything seems to be going down. Last month, the S&P 500 has been down 3.5%. The Nasdaq 100 not so much at 2.7, so tech a little bit stronger still. You have the overall Canadian market, the TSX Composite Index down 3%, and you have Bitcoin hovering at around 94,000 as well. I'll probably add Bitcoin, just a quick show of the price. So under, obviously, we know that Bitcoin hit 100,000, went to 105, 106, now it's back to 94. So let's take a look at the high yield landscape with a special focus on the diversified funds and the index-based funds first, of course, which I feel are the best funds to really should be the foundation or the core of your portfolio. But first, I'd like to take a moment to thank the sponsor of the video, a good friend of the channel, Harvest ETFs, which of course we know everyone that they have their all-in-one HDIF, the Harvest Diversified Monthly Income ETF, but they also have high income shares, single stock with covered call ETFs. So as we know, they have a Lilly one, Amazon, Microsoft, Nvidia. But in case you didn't know, I made an announcement for this already, and I'm gonna have a video scheduled with Michael Kovacs to discuss these in detail. They're coming up in January, probably in a week or two, so it's very exciting. They're coming out with other ones as well. So they're coming out with a MicroStrategy single stock covered call ETF, Coinbase one as well. No leverage on these ones. The leverage, the 25% leverage didn't get approved, unfortunately, because they're very, very high volatility. But they also have one for Tesla, Meta, and Palantir, which the leverage was approved. So that's why you see here they're going to have modest leverage. That's why modest leverage is written here, but not with the MicroStrategy and Coinbase. And very, very exciting, they're also launching their all-in-one HHIS, which is going to have all the Harvest single stock covered call ETFs, which is going to have basically 9. And I'm assuming more are going to come later. So very exciting. Stay tuned for that video where, this is a very, very big, coming right out of the gate strong in 2025, a very exciting launch. I'm especially excited for the MicroStrategy. Finally, we're going to have a MicroStrategy, even a Coinbase covered call ETF in Canada. A really a cool or leverage way to get access to Bitcoin, if you will. And then also HHIS, we're going to have finally an all-in-one single stock covered call ETF. So moving on, of course, from Harvest, still you have HDIF and HBIE, which are, in my opinion, they're two good ones if you want some foundational positions here. So HDIF is 100% equity, 100% stocks. No change in distributions rate as far as I could see. A little over 10% yield now. It's probably a little bit higher today because the market went down. It's probably 10.3 or something like that. And then they have HBIE if ever you're interested in that 60-40 portfolio mix with covered calls, right? So HBIE is also an option for you. And moving on, and we're pretty much covering, the Great 8 here. You guys know I came out with a pretty popular video called The Great 8, and you guys know that these 8 funds, which HDIF and HBIE are part of, as well as the other ones that I'm going to cover here. I'm covering the ones that are index-based or diversified plus leveraged first. So from Hamilton, you have, of course, H-Yield and H-Div. H-Yield now over 12.5% yield. So obviously, because HYLD is not currency hedged, it is kind of the Canadian dollar getting weak is hurting the fund a little bit. So that could be a good opportunity. H-Yield actually over 12.5% yield now, which focuses in the US market. HDIV focuses a little bit more on the Canadian market, also hovering near the 12% mark. 12% yield mark. No changes with the distributions, by the way, on all four of these: HDIF, HBI, HYLD, and HDIF. Moving on to Global X, which has the index-based ones, of course. S&P 500 Classic, USCL, QQCL for the NASDAQ 100. Both of them have not changed their distributions as far as I could tell. Still 25 cents for QQCL, 23 cents for USCL. It is possible that it has a distribution increase. It is possible maybe 1 cent, but we'll see what happens. We'll see what Global X decides to do. They also have a Russell one, RSCC, but no RSCL, no leverage version, and the distribution has remained the same at 21 cents, I believe. They didn't update their website here for some reason. You don't see the January payout, but I'm pretty sure it's 21 cents I saw in their press release. So now we also have a Russell 2000 covered call ETF, but no leverage version yet. Hopefully they come out with that this year. I'll certainly try to push them into it. Then you have the whole world, EQCL, which is basically a covered call and leverage version of an XEQT or VEQT or FEQT, etc., and no distribution change. Last but definitely not least, you have Brompton's leveraged all-in-one, the only one that has 33% leverage instead of 25, a little bit more leverage, which I like. I wish everyone would start using 33. But the assets in the Brompton one here are less volatile because you have some fixed income in here. Fixed income, you have about 25% fixed income, 75% stocks, and the distribution is right now sitting at about 11.5 cents a month, which is basically giving you about 10% yield. So maybe this one would be under the same kind of class as an HBIE if you really want to add some fixed income in there and you don't want full equity. So these are the leveraged ones here, except for RSCC, of course. Which I consider, some of the top funds in Canada to make the foundation of your portfolio. You guys know that most of these are in my, a couple of these are in my portfolio as my foundational positions. Let's move on now to the other funds that don't use leverage. All right, so BMO's all-in-one, everyone, that includes most of their covered call ETFs, ZWQT. Yield is just under 6%, so not much of a high yielder for this one. And as far as I know, their distribution has remained the same. There's no change with their distributions at 8.5 cents here. We'll see next month. Maybe for 2025 they'll increase it, but I doubt it. Moving on to some of the top ones, index-based funds from Evolve that are not leveraged. If ever you don't want the leverage, you have ESPX for the S&P 500. Of course, remember also that there's the non-leveraged version of USCL, which is USCC, and I believe USCC has recently taken the lead over ESPX in terms of total return. So make sure you're always, if you're trying to decide which one, because there's a lot of index-based ones now, everyone, always make sure to compare the total returns, because the total return is always the ultimate truth. But ESPX is a really good one, and as far as I know, they didn't increase the distribution yet, which I'm pretty surprised. I thought maybe they would for 2025. But you're looking at about a 7.5% yield. Still not bad for a non-leveraged S&P 500. Only does cover calls on 33% of the portfolio, by the way. They have the same thing for the TSX 60 index, ETSX. The yield's a little bit higher on this one at 9.21. And no distribution increase as well. Of course, now you have JEPI and JEPQ, Canadian listed versions of their very popular JEPI and JEPQ ETFs in the States. They still do the exact same thing, by the way, same exact ETF, same management fee, same strategy, and same pretty much yield. I know many of you have been disappointed because they both declared lower distribution, much lower than last month, especially the JEPQ one. I have a suspicion it's because the first distribution was probably more than a month's worth of distribution. So remember that JEPI and JEPQ, I talked to Hamilton Rainier about this, about the potential yield, the guy who actually manages the fund. With JEPI, you could always expect a yield of about approximately 7-8%, everyone. JEPQ a little bit higher than that because it's the NASDAQ. These would fall under the same category. A JEPI would fall under the same category as like a USCC or an ESPX, right? S&P 500. But this is stock picking within the S&P 500, so a little bit more defensive. So I always prefer the index myself. But you have JEPQ, which I guess you can compare it to a QQCC. or even the Invesco one, QQCI. So Invesco also has now a NASDAQ 100 covered call ETF. They also have an S&P 500 one, but with a twist, equal weight. If ever you want an equal weight of the S&P 500, personally not a fan. I would always get the market cap weighted, so you have the biggest percentage in the best companies. But hey, if this suits your boat, you're looking at a pretty high yield here, about 9% with EQLI. It's been very consistent actually, so maybe that could be an interest as well. But as far as the Invesco NASDAQ 100 covered call ETF, it's actually not beating QQCC, which is surprising because it has 0% fee as a promotion. I don't know when that ends, but hey, that's a good job that Global X is doing. Really phenomenal job on their ETFs. And then there's also a Fidelity one too, FEPI, which is of course a play on words trying to go after JEPI. That's the main competition. The yield is about the same on this one, right? It's about 7.5%. The fees 40 basis points instead of 35, and this is more of a rinse and repeat strategy where they're doing 2% out of the money on the actual S&P 500, whereas JEPI is stock picking within the S&P 500. So lots and lots of choices, leverage and non-leverage, but they're pretty much, a lot of them are going to be based on indexes, right, guys? S&P 500, NASDAQ 100. So just make sure to compare all of them and figure out which one is best for you. The best doesn't exist. It's what's best for you. Moving on to other ones as well. You have PDIV, which is still very interesting from Purpose, which is a North American covered call ETF. No leverage, very high yield, 12.25. They haven't cut the distribution yet. This could be a good option if you want. I guess it's kind of comparable to HDIV, where it's like Canada and US together. So a nice little hybrid North American exposure here with no leverage at 12.25% yield. Pretty good yield without the leverage there. Moving on, so Bitcoin obviously has been doing really, really well. Past 100,000, now it's back down, and the distribution has been increased here. For this one, okay, this is just a notional, so it's still at 8.5. We'll see what they declare in a week from now, but I'm assuming it's probably going to be the same distribution. Same thing for Ethereum. They raised it a couple of months ago, and it's still at 4.05 cents here. Moving on to split share funds and closed-end funds. Of course, you have the king of closed-end funds in Canada, Canoe EIT Income Fund, which keeps going up and up and up. It's still trading at a small discount, which is incredible. It always does, but they didn't increase their distribution. It's still 10 cents a month. I thought maybe, they could have at least increased it to 12 cents a month or something, but they didn't do it. I guess it's just going to stay 10 cents a month forever. But hey, still a fantastic fund that seems to have crossed the 3 billion mark. Moving on to split share funds for Brompton here. A lot of them are still I'm filming this on Friday, by the way, and they update their NAVs every Friday, which is good. Excuse me. By the way, guys, please hit that like button. I would really appreciate it. I keep forgetting to ask you. These videos get 10,000 views. I don't even get 1,000 likes. So I know you forget. I do too. Please hit that like button. I would really, really appreciate it. So you have a couple of, even GDV now. GDV is back at a discount, right? It's worth $11.22, but you could buy it for $11.01. So absolutely incredible. You guys know that GDV is probably my favorite split share fund of all time because it's very well-rounded. It's very diversified, focuses on dividend stocks all over the world. But you also have LBS. If you're into Canadian financials, you want to pick up some Canadian financials. I know we have Bank from Evolve, which is very high yield, but LBS could be a good option too because it's trading at a discount. You see it's worth $9.79, but you could pick some up for $8.75. Even SBC, right, pick some up for about 10, and it's worth $10.83. So a lot of great discounts when it comes to split share funds right now. And if you want to receive a weekly report every Friday, and instead of calculating the discount and the premium yourself, I do a weekly report every Friday called the Opportunity Report, where for the Brompton split share funds and the Middlefield split share funds, I give you a report on the discount and premium for each fund so you could see if any of them are undervalued. So you got to become a member to get that report. Just hit that little join button, everyone, to get the information there. It's not expensive at all, and it's worth it, especially if you're into split share funds. So Even in the middle field, you have ENS, Enbridge trading at a big discount, right? You have the net asset value way above the market price. So if you want to, if you want to leverage play on Enbridge, you really like Enbridge, ENS, now is a great time to buy it. RS real estate still suffering. REITs are still suffering in Canada, and this one is trading at a premium right now. And the infrastructure dividend split corp is still trading at a pretty big discount. You see that here. So that's it for the split share funds. In terms of what's undervalued, everyone, well, listen, the market is kind of taking a general dip. Hopefully that continues, because it means more cheap shares for us. So of course, it's never wrong to keep adding to your core fundamental positions, which all the ETFs, or especially in the first half of the video, are good for that. But in terms of sector, I still think that the utility sector is just destroyed, and is a good time to pick some up if ever you want to capitalize on a certain sector. And you got a lot of choices. You have Utes from Evolve, which is like now 18% yield or something crazy like that. You have HUTE, which is more global utilities from Harvest ETFs. Leverage 25%. Yield is over 10 here. You have, if you want an unleveraged one that focuses only on Canada, you have UMAX from Hamilton ETFs. Don't forget that UMAX is included in HDIV. You also have ZWU, just your classic boring utilities covered call ETF from BMO. So there's lots of utility covered call ETFs. This could be a good time to pick some up if ever you want to play a sector. If you don't feel like playing a sector, just keep investing in the index-based and diversified funds, everyone. Even real estate, same thing, right? You have RS, which could be a good pickup because REITs are suffering, but RS is trading at a premium, so you're gonna pay more than what it's actually worth. But don't forget that Hamilton also has a REIT covered call ETF, which there's a little bit in HDIV and HYLD in, and even Harvest has a REIT covered call ETF, HGR, which is included, by the way, in HDIF. I believe. Yeah, let's just check real quick. Portfolio. Yeah, there it is, HGR. It's 6% of HDIF. It's also included in HBIE, I believe, as well. So, yeah, here it is. So you could get some on its own, or if you just, invest in the all-in-ones, you're going to get a little bit of real estate as well. So, that's it, everyone, for the overall income landscape in Canada. So keep buying, keep averaging down, keep increasing your passive income. That's what it's all about. This month's going to be very exciting with the Harvest launch, right? There's a big Harvest launch, and expect a video with me talking to Michael Kovacs to tell you all about these. If you have any questions you would like to submit, I remember that now I always allow members to submit questions for upcoming Q&A. So, just click on the little join button, become a member. I'll make an announcement, and maybe your question will be asked during that live Q&A. So once again, guys, we're going to do this again next month. I will always keep you updated on the income landscape. That's what this channel is all about. So make sure you're subscribed. I would really appreciate it, and see you next time, everyone.